Hi, this is Jim Pearce, Chief Investment Strategist for Personal Finance, with a weekly update on Friday, February 14th, 2025. And happy Valentine's Day, everyone. Just thought I'd get that out there. 2 days ago, we got the CPI, or Consumer Price Index numbers for January, and I have this page open for you here. They came in hotter than expected. Last month, CPI rose 0.5% versus the 0.3% increase expected on Wall Street. Now, core CPI, which excludes volatile food and energy prices, grew at 0.4% in January, double the rate recorded in December. Now, my hot take on that news peg can be found on the PF site in the upper right corner of the home page, and actually on several of the pages. So here I'm showing you the actual hot take. Now, if I go back to the home, I just want to show you where this is. Over here on the right, this is new. You can see, looked like a couple days ago, I did a hot take here on Marriott's big share price drop after they released their Q4 results. And then back the next day, I commented on the CPI numbers that we're talking about now. And in fact, today I also responded to a reader's question about Iron Mountain. So that's going to be there permanently. I would encourage you to check it. Now, a reader did bring up a good point, which is in the Marriott update, I changed our advice in terms of price. And going forward, if I'm going to change my advice, then I'll make that the Wednesday portfolio update, since those get emailed out to you, so I apologize for that. The hot takes do not get emailed out to you. They're really meant to be just like a comment on what's happening today. So in any event, I'm really excited about this because there's so many times I want to tell you something and I think, well, gee, if I write that article today, it'll go in the next issue of PF, which isn't being printed for another 2 weeks. And then it takes another 2 weeks to get to you. I just want to put it out here. And we have the stock talk function down below there so that we can have a dialogue about that specific point instead of questions on other topics. So I'm actually quite excited about the hot takes. I know it'll take a little while to get used to, but this could actually be very useful information because it's real time and it's actionable. So anyway, I'm thrilled to have that on there. Now, in my week ahead article on Monday, and this is another new PF feature, you know how Friday, like I'm doing now, I kind of review the past week. So we thought, why don't we on Monday tell you kind of what we think is coming? At the bottom of each one, I kind of have my 3 things to focus on, which this week was more trade tariffs on the way, and I'll talk about that in a minute. Marriott's Q4 results, which I then followed up with a hot take, and the CPI numbers, which I followed up with a hot take. So really what I'm trying to do is create a dialogue. Instead of sending you this one issue every month that's several weeks old, I want to have this ongoing dialogue that's in real time, talking about the same things and with the same content, and actually more of it, that would normally go into the print edition. Now, in this week ahead article at the start of the week, and here we go, I discussed the problematic nature of the new trade tariffs that President Trump has imposed thus far. Fortunately, he announced yesterday that the next round of tariffs will not be enacted until April at the earliest, so it's too soon to start worrying about them. If you're looking for something to worry about, consumer debt delinquency in the United States reached its highest level since the onset of the coronavirus pandemic nearly 5 years ago. Except this time, there is no pandemic, and the economy is in decent shape. It's not great. GDP grew at 2.3% last quarter, but employment's still strong. And overall, the economy is actually in reasonably solid shape. So this trend reversal over the past 6 months is concerning because, are consumers tapped out, and are they now just borrowing more money to, maintain their current standard of living? But with interest rates going up, that'll eventually just cut in even more, and then they have to borrow more. So hopefully this trend will flatten out and reverse here soon. But if you're looking for some kind of warning, a shot across the bow, this is something to pay attention to. With that out of the way, I'd like to comment on our decision to discontinue the print edition, which, by the way, is written about in the current edition, or the new edition of Personal Finance, and I believe Investing Daily is sending out a separate letter directly from me on that topic too. But as you know, with all financial decisions, everything comes at a cost. And the cost of printing and mailing the monthly issue of Personal Finance is just too high for us to stick with it. That is why the new issue of PF published to the site today will be the last print edition ever. Doesn't make me happy to say that. I've been doing this for 10 years, and there were people doing this 40 years before me. So it's kind of a sad day, but it's also just the reality of the times in which we live. So instead, we have added the new features noted above, and we have more enhancement on the way. We still got to work out all the technical stuff, but there's some more things coming. And we know this is a sad day for some of you, especially subscribers that have been faithfully reading personal finance for decades, and in many cases, saving them. Sad day for me too, but I believe these changes are not only necessary, but will provide greater value to our readers, namely you, going forward. That's because the content in the print edition of Personal Finance is at least 2 weeks old by the time it arrives in your mailbox, because that's how long it takes us to send it to the printer, have them print it, and then ship it out to the mailing company and have them mail it, and then it takes a few days to get to your house. But it's at least 2 weeks old, and some of it's up to 6 weeks old. So that's not much help given how quickly the global financial markets react to breaking news. We believe that adding the week ahead and hot takes content, along with some of the other changes we're working on, is much more useful to you than sending you weeks old content that you've already seen on the website. We invite your comments. We know that there's going to be some pushback, but we just believe it's time to do this. And again, I'm just very excited about the other features that will be coming to you every week. So that's this week's PF video update. I look forward to talking to you another week. Thank you.